Right, welcome to the video. Really excited to dig into this. So we're actually going to hop on the charts very shortly and we're going to touch on how I personally pay myself in the markets, why it's so important to do so, and just a few little tips along the way to help you in that process as well. So really looking forward to that, and it's something that whatever style you trade, however long you've been trading, is something that you can at least experiment with, play around with, and then see if it works for you. For me, I added in this, I think around mid last year, and it's one of those things where break-evens can now become small profit, losses can now become break-evens essentially. Like there's a few different advantages of doing that. So looking forward to actually explaining that to you, and it's something that's worked well for me. So looking forward to digging into that. But overall, I feel like I've not been as active on YouTube as what I would like to. Things have been really busy on my end with just a few different projects and a few different things I've been working on. Really want to get back to doing frequent uploads on YouTube, which I'm trying to kind of mix in between my schedule, but I will get there. I'm still trying to figure it out, but we'll get there. And overall, just in a really good place, really busy. And yeah, I did take a week away at the end of Q2, which was perfect because it was like the halfway point of the year, and just to relax, completely forget about trading, completely forget about work or everything, and just get away and just relax and just have fun. It was so good just to do that, and I recommend everyone do that every now and then. And yeah, it was just good. You know, I've got a few different ideas that I could do to improve my overall trading, how I can be more effective, just certain things I can do to optimize things more as well. And yeah, I'm just looking forward to going forward really into Q3. We're into Q3 right now. Q4 is going to be big as well. And the biggest thing that I really want to be able to do is, you guys last year from the full day of trading series may have seen the fact that I was trading both with the order flow and against the order flow. So for a while I was doing it for a good while. Then I figured out that my strike rate trading against the order flow, i.e. those counter trend moves, were not great, so I removed that from my trading and just focused on trading with the order flow. That worked very, very well. Still working very, very well, but what I found in Q1 and Q2 is that the frequency seems to have dropped, so I'm not taking as many trades. So with that in mind, the most logical approach was to find a solution to improving the strike rate, but still be able to trade those counter trend moves, because they're still profitable and they're still very lucrative at times as well. So if I could do that with a fairly high strike rate, then it's something that I'm going to be looking to do. So I've started to integrate a little bit into it, but I'm picking and choosing moves right now. I'm in that stage of kind of experimenting. But yeah, I caught a really nice trade last week. I think it was last Monday on GJ. So that's the one we're going to be looking at today. But yeah, looking to do that within my trading. That's kind of the main focus for the first month of Q3, i.e. July. Figure out a system, figure out a way that I can do that. I'm pretty sure I've figured it out, but I'm kind of gonna test it more, gonna practice it more, and then go from there. So that's the plan. Right, it has been quite a long time since I've actually done this on the charts, but I wanted to jump on the charts and show you a quick example of how I actually manage trades, and maybe it's something you can actually experiment with yourself to actually put in place, or at least think about, contemplate to see whether it works for you or not. But for me, paying yourself in the market
is such a big aspect of trading in whatever form that is, whatever style you trade, however long you've been trading, whether you've been trading 10 years, 5 years, a year, 6 months, whether you're brand new to trading. Personally, in my perspective and my opinion, based on what I've gone through in my 5+ years of trading so far, it's crucial to pay yourself in some form or another. Get yourself paid. So the way I personally do that is I will do it and I will know exactly when I'm going to be paid prior to getting involved in the trade. And I think personally that's so important for me. I've seen other traders, and I've done it in the past countless times, where you're actually in the trade, let's say price is continuing to run, and you kind of make it up in the moment of where you're going to take profit, where you're going to partial out, all these kind of things. But the problem is with that, if you're not fully on top of your psychology, your emotions can get the better of you, and you start drawing in quite a few different things that don't necessarily need to be there. You may take profit too early, you may take profit too late in regards to letting price pull back, and a lot of problems can come from that. Obviously, if you're trading the same capital that you are right now, it may not be a problem, but in the future, you have to think in terms of scalability. If you're trading much large capital, is it something you're going to be doing in the moment, where you just randomly take profit at different areas and stuff like that? I'd much rather, for myself personally, have it predefined before I'm in the trade, make it that aspect of my trading mechanical, because that's effective in my opinion, in my perspective, and that's what's worked for me so far. So I'm going to continue doing it. But cracking on with what we're supposed to be talking about here. So I'm not going to go through obviously everything in regards to the trade itself, but I just wanted to show you an example of how I'm partially out of trades and how it's benefited my trading so far, and it's something you can play about with and experiment with. So let's touch on this. So I was triggering into the trade. So this was a trade on GJ that I took on the 11th of July, coming into New York, and it was a beautiful trade. So price pulled back into the origin of the move. I was triggered into the market here, safe stop just above, and personally for me, I don't like to have super tight pip stops. This may be tight for you. It depends on obviously what time frames you trade and what style you trade, but for me this is quite safe. It's above the high, I've got enough room for things like spread and stuff like that, and I'm very comfortable with that. I know I can scale that. I don't want to have it too tight in the respect that I'm all the way down here, because for me personally I can get triggered out of that trade, and that's what used to happen quite a lot. So I'd much rather have a slightly bigger stop and still be in the trade and bank the profit than be too greedy, be tapped out of the trade, and the trade goes. So for me, that's just what I personally decided. But with this, price has come down, so I've been triggered into the trade, we've had that reaction, price has moved to the downside, and here at 3 to 1, so if you just look at the risk to reward tool, obviously this represents 1% or 1R, this represents 3R, so at 3% or 3R, that's when I'm taking a partial. That's just what I've come up with myself based on data. I found that basically the amount of break-evens I was taking in the respect that price would run 3, 4, 5 to 1, quite often around about 3 to 1, and then pull back to break-even was quite astonishing. So what I decided to do is act on that data that I recorded, put a partial in place, and that's what worked for me so far. And I haven't changed it so far. I haven't needed to. So what I'll do is 20% of the volume will automatically be removed in the trade as soon as price gets to 3 to 1. That means that what? Number one, I pay myself. So I'm banking profits early, which gives myself to essentially be risk-free on the trade, even though I am moving to break even. So as soon as this will happen, I've already got my risk removed at break even. Instead of my risk being here and being in full loss if price reverses, I've trailed my stop to cover commission, things like that, and I'm already at break even. So if price reverses, it takes me out for break even, I've taken a break even. However, I've also taken technically a small profit, so it's technically a win from the trade. I would count it as a win / break even, but I'd be out of the trade. That's the good thing about partialing that. That's the good thing about paying yourself, because you're banking those profits early. Let's say you didn't move to break even, even if you decide to keep the risk open, maybe let's say trail the stop slightly tighter to remove some of the risk. Even if price reversed from here, and let's say price failed to take out this low, and then we start to push higher. Even if that happened, you've technically only taken either a small profit, a break even, or a very small loss, depending on how you do things of that trade, because you've already taken 20% of the volume off at 3 to 1. So technically, you shouldn't be losing on that trade, or even if you do lose, it should only be a very small amount. So it's just such a good way to manage your risk. And if you do want to be that trader where you don't move to break even, because sometimes price will obviously do things like that, tap you out for break even and then go, that quite often happens. If you want to recognize that and put it within your trading of trailing stops above the high, and that's right for you, then completely do that. But for me, this is just a good way to remove risk at 3 to 1, pay myself, because a big habit that I would recommend you get into, whether you're 6 months into your journey or slightly further ahead, is, like I said before, paying yourself. Pay yourself, build up your confidence and the habit of winning by paying yourself, even if it's just a small profit, even if it was just a 10% partial taken, 3 to 1, 4 to 1, 5 to 1. I'd highly recommend getting to the habit of paying yourself regularly, because the trades that were previously break even may now be winners. So it's just a good way to build your confidence, maybe increase the strike rate as well, play about with it. So that's what I'll do. So I basically took 20% of the volume off here. So at this point, 20% volume's off, and my target for the trade was here, in this bigger area. So target was here, it was almost 15, it was 14, just above 14 with things like commission and stuff like that. But it was counter trend. So obviously understanding order flow and things like that, I understood that, but I also understood that price had to come back, or was likely to come back down based on how price was reacting, based on nature, to come back down into discount to be able to potentially buy again, right? So I sold, and then price run on quite nicely. So if we just back out a little bit, this did end up being a very nice position of just over 14. So took a little bit of time to play out. This was New York, obviously held it overnight, something I don't do too often, to be honest, just starting to introduce more often now. And then coming into London, that's when obviously the TP was hit and I was out of the trade. So just quick mini lesson on the fact that I'd highly recommend just giving this a back test, even if it's something that you don't do right now. This is something that once I added it into my plan, it was such a small thing, but added quite a big aspect to my trading, because suddenly I felt more confident in my trading. It was a mechanical system that I could put in place, and it's predefined, meaning that it's already set prior to get involved in the trade, which is such a big benefit in my opinion. Instead of being in the trade, running 8-6% and then kind of deciding in the moment where you're going to lock in profit, I don't personally think that's too effective for the vast majority of people. For some people, maybe, but for the vast majority of traders, it won't be. To do this, you can manually just close at 3 to 1 or 4 to 1. Obviously, you can do that on MT4 by going on close and then removing some of the volume and then just automatically closing the position. I used to do that. Now I use an EA on MT4. I used one previously called Trade Assistant 9.0, and currently I've just been testing out over the last few weeks a new system which I'm going to be talking about probably very soon. I just want to give it more testing, but that's been more effective, allows me to enter trades quicker, allows me to do things a lot quicker, and it's just been really good. So I'll talk about that in the future, but having EA running if you want to do it automatic on MT4, it's very simple to download and integrate into MT4, and then you're away from there. So definitely check that out and definitely have a go with that as well.